Here we are again at the TRADER24 studios. A strategic decision by the giant Apple that it will significantly slow down hiring and new investments due to recessionary fears was enough to delete the gains on Wall Street in a session that not only failed to maintain the positive territory it had been in since the opening, but eventually closed at the low of the day with pressure on the aftermarket. The disappointing financial results of the major U.S. banks and investment firms, combined with the already depressed sentiment from inflationary pressures, acted as a disincentive to maintain buying positions, and so uncertainty finally returned. Moreover, one by one, the central banks of the major economies are adopting an aggressive tightening policy, with that of Australia coming back more aggressively by committing to another 75 basis points very soon, after 135 basis points in the past weeks. You're watching the TRADER24 Global Market Overview. Let's take a closer look at the situation. On Wall Street, a parade of disappointing second quarter results and the conviction of Apple's management turned the tide in a session that looked like a walkover from buyers from the start. The New York Stock Exchange index, from plus 1.20% at the opening, gradually lost everything and found itself closing negative at minus 0.32% and near the lows of the day. Similar behavior and even heavier picture was seen in the S&P 500, Dow Jones, and Nasdaq, which closed with losses of 0.84%, 0.69%, and 0.81% respectively, with small cap following, with the Russell 2000 down minus 0.34%. 8 of the 11 S&P sectors closed lower, with healthcare at minus 2.11%, utilities at minus 1.39%, recording the largest losses. The VIX Risk Index gained 4.22 percentage points, also indicating investment uncertainty. The main negative protagonists in large cap were Progressive with minus 4.99% and Bio-Rad with minus 3.69%, while in the technological sector, Regeneron minus 3.43% and Dexcom with minus 2.72% were the worst performers. Finally, in the industrial Dow Jones, 21 out of 30 saw a negative sign, with Merck and Johnson & Johnson recording the largest losses, minus 2.76% and minus 2.24%. In the pre-market now, most listed companies are moving into positive territory, with the Chicago futures giving a tepid, bullish opening, at least for now, with Asia closed with mixed signals in the shadow of uncertainty on Wall Street. The Hang Seng was down minus 0.87% at 20,665. The Shenzhen was down minus 0.2%, while Japan's Nikkei closed at plus 0.70%, and the Topix closed with 0.70% as well after the holiday, boosted by the commodity sector and expectations for upside maintenance. Finally, the Australian 200 remained unchanged. Developments within the Eurozone may set the pace not only in domestic markets but also globally, with all eyes on the political drama in Italy, with its implications on sovereign debt, and on the ECB's moves regarding interest rate targeting, with the market considering a 25 basis points rate hike after 11 years as a certainty. European markets moved upwards. The DAX closed at plus 0.74%, with the French CAC 40 unchanged, while the 50 and 600 Euro stocks closed plus 1% and plus 0.93% respectively. Zalando stock recorded the biggest gains at plus 5.14%, followed by those of Sartorius plus 3.67% and Deutsche Bank at plus 3.49%. At the moment, the main indices are showing modest losses of around minus 0.50%, and in the Athenian Stock Exchange, Greece is at minus 0.70% in the general and the large cap 25 indices, with the banking sector resisting at minus 0.40%. In U.S. Treasuries, the sellers prevailed again, leaving the 10-year yield at 2.96%, a few basis points lower than the local highs, with that of the 30-year seeing 3.13%. The interest rate curve is almost flat, with a 2-year around 2.94%, while in Europe, the German Bund sees a yield of 1.17%. The spread of the Greek is at 227 basis points, the Treasury at 177 basis points, and the gilt at 96 basis points. In the forex market, the euro-dollar exchange rate broke out of the parity zone, closing more than 100 hours at this level, and supportive markets are pointing towards 1.04, always in a bearish pattern in the context of the ECB's expected involvement in the interest rate war following the release this week of inflation data. Partial mitigation of strong dollar buying is currently being seen, with the respective DX index at a notable step just below 108 points, near 20-year highs. The pound is now at 1.20, the Swiss franc at 1.0260, and the New Zealand dollar at 0.62. The yen-dollar exchange rate is also at a 24-year high, losing 138 yen at the moment. Strong movement was seen from the Australian dollar, which touched 0.6850 per US dollar in the wake of the central bank's announcement of accelerated monetary tightening, with the market now expecting another 75 basis points after the also aggressive 50-point intervention weeks ago at 1.35%. It should be noted that the domestic unemployment rate recorded at 48-year low of 3.5% after the addition of 48,000 workers compared to the 30,000 expected by the ministry. In commodities, there is the problem of very expensive gas, with a TTF at 159 euros per megawatt hour and Henry Hub now passing $7.50 per million thermal units. The EIA's recent report showed reserves at 2.369 trillion cubic feet, well below the 5-year average of 2.688, typically seen at this time of the year. Gold and silver continue to be under pressure, with the latter having lost all of $19 per ounce. Gold also marginally maintained $1,700, apparently in negative territory at 11-month lows and far from the highs of $2,060 a few months ago. In agricultural commodities, wheat marginally maintains the $8 per bushel area at 5-month lows, but the announcement by U.S. officials that they will not sanction imports of seeds from Russia is a positive sign. And in fact, the USDA has released a report that indicates a strong expected supply in the coming weeks. Corn continues to recover from 7th-month lows in the $6 per bushel range, following a report of lower production levels in Central America due to poor weather. Finally, in the freight market, the Baltic gained 0.6% to close at 2,162, marking a monthly high mainly due to a 1.6% increase in Capesize, with the Panamax closing negative for the 20th session with a 0.7% loss and the Supramax making a new 5-month low. In terms of economic releases today, in Europe, all eyes are on the Eurozone CPI results for June, while later in the day, the Bank of England governor is expected to speak. In terms of corporate announcements, today we expect the financial results of Johnson & Johnson with projected earnings per share of $2.55 and revenue of $23.8 billion, Lockheed Martin with projected earnings per share of $6.34 and revenue of $15.99 billion, Netflix with projected earnings per share of $2.96 and revenue of $8.03 billion, and Halliburton with projected earnings per share of $0.4468 and revenue of $4.71 billion. Also set for today is the Lowe's dividend ex-date with a yield of 2.27%, up 26.8% on a yearly basis and 29% on a monthly basis, and Caterpillar's with a yield of 2.77%, up 22.7% year over year and 31% month over month. Yesterday, Bank of America reported financial results with earnings per share of $0.73 and revenue of $22.29 billion, both below forecasts. IBM with earnings per share of $2.31 and revenue of $15.54 billion, both below forecasts. Charles Schwab with earnings per share of 0.97 and revenue of 5.09 billion, both above forecasts, and Goldman Sachs with earnings per share of $7.73 and revenue of 11.86 billion, both above forecasts. The total market cap of the crypto market managed to reach the $1 trillion mark again after falling to $800 billion last month. In this bull market, in which the crypto market has been moving in recent days, despite the announcement of inflation at 9.1%, Bitcoin recorded its highest price in a month early this morning, reaching $22,945. In recent hours, however, it has been hovering in the $21,600 to $21,700 range. The second largest cryptocurrency, Ethereum, also hit its highest price in a month at $1,630, up 20% since Friday. In altcoins, Polygon's Matic token has risen over 126% in the last month and over 60% in the last week alone, following the recent announcement that it was selected by Disney along with 5 other companies for its accelerator program. ApeCoin, a native token of the ecosystem of the famous Bored Apes Yacht Club collection, also rose 4% from Monday to $6 after the first images of its upcoming metaverse platform were revealed on Twitter. Thank you for joining us today. It was the TRADER24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.